Well, obviously, one of the issues that Americans are most concerned about right now is inflation. The high prices that we're all paying at the grocery store, at car dealerships, pretty much anytime you want to buy anything, prices are higher than they were a year ago, and certainly higher than they were than a few years ago. But there does seem to be maybe some misperceptions about inflation. What does it really mean? How does it come about? How do you get rid of it? And there's a really good new book by the Cato Institute. It's called The War on Prices: How Popular Misconceptions About Inflation, Prices, and Value Create Bad Policy. And joining me to talk about it is the editor of this book. He's an economist at the Cato Institute, Ryan Bourne. Ryan, thank you for joining me here on the DC Debrief. How are you?
Great to be with you.
It's great to be with you as well. And I think as we're all dealing with inflation, it's certainly when you ask Americans what are the most important issues for them here in this upcoming election in November, inflation, high prices are near the top of the list, if not at the top of the list for most Americans. And obviously, in your book, you talk about COVID-19 and the fact that it obviously got a ball rolling, where it was much, much higher during just after the height of the pandemic, certainly because of a lot of the different supply issues that were going on. And it was a major factor. But inflation we're experiencing now, is it still mostly driven by COVID-19, the after effects of COVID-19, and what the government did, what had to be done in order to keep the economy rolling? I guess, what is the relationship between COVID-19 and the inflationary period we're in right now?
Yeah, I guess it's trivially true that the pandemic led to this period because, if we hadn't had the pandemic, we wouldn't have had, extraordinary monetary policy, a very loose monetary policy at the same time as the federal government dishing out like trillions and trillions in stimulus. However, if you look at like the individual supply shocks that we saw coming out of the pandemic and then the Ukraine war, though there were certainly periods where they raised the price level, the only way that you get a kind of sustained increase in prices, as we've seen, is with the government, that's the Federal Reserve and Congress and the president signing off these fiscal bills, really raising total spending in the economy higher than it otherwise would be. So prices right now are about 12% higher than we would have expected them to be if inflation had been on target. And I reckon around 80% of that is due to excess spending in the economy. So it's from the demand side of the economy rather than those supply shocks.
So why is the demand side so high then right now, higher than it maybe should be?
Well, I think the primary reason is that we had an extraordinary period of the growth in the money supply in the first 18 months to 2 years of the pandemic, where the money supply increased by $6 trillion. And when you have more money chasing goods and services in the economy, that pushes up prices. On top of that, of course, we had extraordinary stimulus bills coming from Congress at the start of 2021, when the economy was almost back on its feet. Congress passed another 1.9 trillion in federal spending, and that can speed up money moving around the economy. So you combine those two factors, and the period that we've had after that really are prices adjusting to the fact that there's much more money in the economy circulating.
Now, in the introduction to the book, you say that one of the primary motivating factors for putting this book together was to combat misperceptions or misconceptions about inflation. Can you talk a little bit about what some of the main misconceptions are that you see that are really hurting how we look at inflation?
So I think there's two big ones. One of the main ones is to try and break down the kind of inflation index and say that certain prices at certain times have been kind of driving inflation. It's certainly true when we had the big oil and gas price spikes, that because that increases the cost of producing goods and services, that can cause a temporary increase in prices as it leads to production becoming more costly. But overall, we miss the wood for the trees if we start trying to think about what's going on in one sector, when really, an inflation, which is too much money chasing too few goods, ultimately feeds through into all prices rising. So if you worry too much about what's going on in an individual sector, you end up pursuing policies that are kind of misguided. So you start saying things like, oh, well, if we subsidize green energy, that might reduce inflation because it will reduce our dependence on oil and gas. That fundamentally doesn't affect inflation as a macroeconomic phenomenon. The other big one, I guess we've seen a lot of, is attributing inflation to greedy corporations. saying that corporations have used the excuse of the pandemic and the Ukraine war to raise prices higher than they otherwise need to be. I think that's fundamentally misguided for two big reasons. One is that it doesn't take competition seriously. The idea that all of a sudden companies across a range of sectors were able to collude and none of them were tempted to undercut the others, even though they were raising prices above their fundamentals, strikes me as a bit mystifying. But secondly, it doesn't take consumers seriously, because ultimately consumers were able to pay these higher prices. And the reason they were able to pay these higher prices was because they had more money. There was more money in circulation, and that bid up demand. So ultimately, it was demand driving prices and profits going up at the same time in 2021 and 2022, not just corporations waking up and deciding to be greedy.
Now, in the book, you also note that it seems as though people in government, a lot of economists even, were a little bit late to the party on understanding that this wasn't just a COVID-19 related inflation, that it was going to be a longer lasting inflation, that there were some other issues going on. And the White House eventually started to get on board. Members of Congress started to get on board and trying to understand and tamp down on inflation as much as they can in the roles that they have with monetary policy. Has the White House, has the Biden administration, has Congress, has anything that they've done here over the last couple of years in trying to get prices down and trying to lower inflation, has it had a positive effect?
I think very little. I think as a result of the pandemic stimulus going away, a lot of that ending, that naturally puts some downward pressure on prices in the very short term. But that's not something that the Biden administration was actively seeking. That's
Right.
just a program that ended. I think other than that, there's been, as a result of high food prices in particular, food prices have gone up 21% in 3 years, and that's obviously a big political albatross over around the president's neck, rather.
Mhm.
And I think as a result of that, the White House has been kind of deflecting blame away from not just themselves, but the Federal Reserve onto corporations. And I think that's fundamentally misguided. And one of my concerns is that we'll come out of this kind of inflationary moment with the public more misinformed as a result of these kind of top-down narratives emanating from the White House.
So I guess the next question then is, how responsible is any president, whether it's President Biden or a Republican president who might be sitting in the White House, how responsible is a president for inflation? And what is it that they can or should do to try and lower inflation or keep it from growing out of control? Is that even something that is in their purview and that they have any control over?
Well, ordinarily, no. I mean, ordinarily, most of this is determined by the Federal Reserve ultimately. And the Federal Reserve has to look at what Congress and the president is doing. And if they think they're trying to stimulate the economy too much, they have to tighten monetary policy and recompense. That said, the US does face a bigger long term challenge, which is that the long term debt outlook is quite extraordinary. And if it gets to a situation where racking up those debts is unsustainable, mainly driven by Social Security and Medicare payments, then investors may well decide that there's a risk that at some stage the Federal Reserve is going to have to step in and start buying up more government debt explicitly to keep the government's borrowing costs down. And if investors do conclude that, we could see sharp inflation quite rapidly, because people would come to expect that the Federal Reserve was in effect going to print money to buy up more government debt. So I think I think it's true to say that the president and Congress could make the Federal Reserve's job a lot easier by reducing the budget deficit. And I think it's a good time to reduce the budget deficit. Unemployment is low. We do have these debt headwinds coming down the pike. But other than that, kind of year to year, ultimately the Federal Reserve is responsible for inflation. And if Congress and the president are unhappy with the job that they're doing, they can, of course, change the Federal Reserve's remit. But right now, the Federal Reserve is responsible for inflation ultimately.
It seems like the big economic figure we are looking at nowadays is no longer the monthly unemployment number. That used to be the big economic number. Everybody used to get excited about what does that number look like this month? What's the unemployment rate? Right now, that number seems to be the consumer price index with regard to inflation. And certainly the latest CPI number showed some slightly positive move on a month-to-month basis. Dow rallied in response to that. Is the CPI the best number for us to be looking at in terms of getting a sense of how inflation is doing? And if it's not, is there any one number that best tells the story?
Well, I think we ultimately have to remember that inflation as a macroeconomic phenomenon is really only proxied by these inflation measures, whether it's the consumer price index or the personal consumption expenditures index, which is actually the one that the Federal Reserve targets. I think there is a problem with the CPI right now in the way that it deals with housing costs. Owner equivalent rent tends to lag what's actually happening in the market. So right now, I think the headline CPI number is probably higher than people are experiencing. So inflation is a bit lower than that suggests. But if you look over the long term, I think it's fine to look at either the consumer price index or the personal consumption expenditures index to get an idea of the scale of inflation that we've lived through. And we've lived through the highest inflation basically since the early 1980s.
You also talk a lot in this book about price controls. There's a whole section regarding the fallacy of price controls. But for those of us who don't know specifically exactly what price controls are, what are they and what role do they have on inflation?
Well, they're all different types of price controls, but ultimately they're government mandates that a firm is restricted in what they can charge for a good or service. And they usually kind of cap the price increase that can be pushed through by a corporation or other business. And historically, they don't do anything to quell inflation ultimately, because they don't change any of the fundamentals of the amount of money in circulation or much affect the amount of goods and services being produced in the economy. And so as a result of that, when you try and cap even all prices, what tends to happen is that you just suppress inflation. And then when you remove the price caps, inflation just rebounds anyway. But of course, you cause a lot of distortions along the way, because prices move not just because the general price level is going up, but because our consumer habits change. So relative prices comparing goods and services change over time. And if you fix all of those or cap them and stop them from going up, then you end up with shortages of certain products and surpluses of other types of products. So price controls don't tend to do much to quell inflation. What they do is tend to lead to a lot of inefficiency in the economy. So they tend to lead to shortages, as I just suggested. If you cap prices below market rates, they tend to lead to black markets, because it becomes profitable to supply to people who are willing to pay outside of the controls illegally. And they tend to lead to firms reducing the quality of their product to reflect the new price they're able to charge. So you get declines in the quality of product. We've seen this a lot with rent control, for example, where landlords are unwilling to invest in maintenance and stuff when rent controls are applied. So they're pretty disastrous. But the reason that I mention them in terms of this book is that one consequence of pretending that inflation is all due to greedy corporations or certain prices going up is that we've seen a revival in certain ideas that are in effect price controls. So a lot of Democrats want to impose a federal anti-price gouging law, which would in effect deter or prevent companies from increasing certain prices during emergencies. We're seeing Joe Biden's war on supposed junk fees. So we're seeing like this proliferation of ideas which effectively revive price controls in some way. And I think that's a very dangerous consequence coming out of the moment that we've lived through.
What's your position on tariffs? The president announced that they were going to increase tariffs on some Chinese goods. I know in Trump's administration, he was very much in favor of tariffs on Chinese goods, and there seems to be support in some support in both parties for it, but also some opposition. And the idea, I think, is tariffs are not anti-inflationary, right? I mean, do tariffs hurt or help inflation?
Well, I don't think tariffs do much with regards to inflation overall.
Okay.
So tariffs tend to have two effects. One is that they obviously raise the price of the good that you're imposing the tariff on, not just if you import it, but like domestically as well, because companies are able to charge a higher price than they otherwise would. That increases the costs. If it's an intermediate good, an input into other goods and services, it can raise those prices too. So it changes relative prices in the economy. It does increase inflation slightly to the extent that it makes the overall economy less efficient. So it reduces the overall level of output in the economy for any given amount of money turning around. But the main reason I think inflation is just bad policy in the longer term is that it insulates domestic firms from competition. And when you do that, that dissuades them or deters the need for them to become more productive, innovate over time. So you end up with these sectors that are like insulated from the most kind of competitive alternatives to their products, and that can lead to like lower productivity in time. So I think they're bad policy, but I don't think we should primarily look at them through the lens of inflation. They will certainly raise the price of the goods that they're imposed on. But unless there's more money in circulation over time, the main impact of that would just be those goods are more expensive relative to other goods and services.
Do you anticipate that we'll start to see inflation tick down even more than it has, getting closer to that 2% benchmark? And obviously, as a consequence of that, do you see the Federal Reserve at some point this year maybe cutting an interest rate?
So the important thing to remember about monetary policy is that the inflation that we're seeing now is really a consequence of monetary policy that occurred like over a year ago, right? So I think if you look at the fundamentals, there's still good reason to expect headline inflation to continue falling in the near future, because we lived through a period last year where for most of 2023 the money supply was actually shrinking. So that would tend to suggest that we're going to see a period in which inflation continues to come down. That said, it's ticked up again recently, so it may well just be that we kind of get back to target and then stop there. There's always a degree of uncertainty with this. There could be other short-term shocks that hit the economy. There could be other unforeseen events, but
Sure.
for now, I think the big picture suggests that there might be bumps along the way, but inflation will continue to kind of trend downwards towards the target.
Last thing for you, we've talked about a few misconceptions about inflation, some other myths. Are there any myths we haven't addressed yet that you want to leave the audience with to impart before we go so that people have a better understanding of what it is we're talking about?
So I think on top of this worry about inflation, we've seen the return of price controls across many areas of the economy. So over at state and local level, we've seen a lot of states and localities reintroduce rent control. We've seen quite aggressive increases in minimum wage, which are a price control on labor. We've seen anti-price gouging regulation now in 37 states. And I just think, given that we haven't really had price control since the 1970s, people have forgot the kind of destructive consequences. But from ancient Egypt all the way through to the modern USA, price controls have like a real record of failure. That's all documented in the book. So if you want to kind of learn more about that and why we need to heed and remember those lessons, then I'd urge you to read it.
Well, and here's the book, everybody. Again, it's The War on Prices, How Popular Misconceptions About Inflation, Prices, and Value Create Bad Policy. And Ryan Bourne did an excellent job editing this, CATO from the CATO Institute. It's a really terrific read. For anybody who wants to learn more about inflation, this super important topic that everybody says is at the top of their list of the most important topics in this election, there's no better book to do it. Ryan, thank you for joining me here on the DC Debrief. I really appreciate it.
Thanks a lot.